And right now, folks, as we do every Tuesday and Thursday at 30 past the hour, we're going to talk to our man Tim Ord. You can reach Tim at his website, ord-oracle.com. And don't forget, folks, he's got a couple of great webinars under the Services tab at the front page of TFNN.com. The 6 secret ratios every trader should know. We discuss some of those as we talk to Tim a couple times a week. And the secret science of market tops, how to identify market tops with Mr. Tim Ord. Check those out. Tim Ord, good afternoon.
Good afternoon, Tom. Thanks for having me on.
Always a pleasure. So where are we going, Tim? We got quite the market on the Fed. You got the Russell up, by my goodness. But what are you seeing in this market right now, please?
You know, this is expiration week, which normally is a bullish bias. I haven't really traded well over the last month or so. Got long, didn't stay long enough. But as you kind of go through the market, some indicators work better times than other times, and you got to find what works best at the current time. All indicators work at some point, but not all indicators work all the time. But the one that's basically been really kind of consistent here is that trend panic readings I've been talking about back in, this is what, mid-July to mid-August. We had a bunch of readings coming in on the SPY around the 635 range, and that kind of built a base, even though this is down day here. But if you bought in that range, you know, you would have made some money, not much, but kind of came back into the range, and finally we got a rally going. And now you got a support area between basically 650 to 640. This is the area where the trend reached panic levels of 1.2 and higher. So I'm thinking this is expiration week. We're trying to break out here. I don't think we'll have the volume to break above yesterday's volume. So I think this is kind of more of a sideways week here. This Monday we're here. Tuesday, yesterday was down. Today we're up. So it's kind of a nowhere to go kind of market. Next week I think we'll pull back. Nothing significant. I think I'm probably going to end with a buy signal somewhere between 650 to 640. It's kind of a repeat of Tuesday's commentary, but that pullback looks likely here because just kind of running energy to the downside. We had a big kind of a day down yesterday, and at minimum that should be tested if not exceeded a little bit. But I'm bullish, but not this week. I think next week we'll get a pullback. I think end up with a buy signal.
Can I ask you, Tim, on that real quick? Going back, because that day, right, yesterday, of course, huge day, and we got quite an acceleration, of course, lower, right, and then the market bounces on that. How do you ever look at days like that? And it's a negative day, you know, it's a red day, but when I look at that, sometimes in my head, I say, man, a lot of that volume was some of the buy-in on the upside. It wasn't that bad of a downward day, really. It's a huge volume spike, but if that was like a big candle that's red to the downside, right, versus we got a candle where you got a lot of bounce in there on that day for that volume. How do you look at something like that?
Well, anyhow, I think normally when volume basically doubles from the days before it, which this one did, a lot of times those are exhaust moves to the downside. They're kind of selling climaxes. If they creep up, which they kind of did here,
nice,
back in the July low, those ones can actually keep going, but it went up so fast, or went down so fast, that kind of exhausted itself. So I was kind of not really too bullish coming off this low, because as the volume increased slowly to the upside, you didn't have 50% jumps. This one did.
Sure.
So I think this is all of a bottoming process. So I'm thinking at minimum we're going to test that low. Volume will probably break it a little bit, but I bet when you go down and test that low, that volume is going to be lighter on that test, and that's going to help create the bullish sign.
I love it.
Those big jumps in volume out of nowhere, up or down, are usually exhaustion moves in that direction. So I'm thinking this is actually building a base here. So that's how I interpret it.
Nice. That's a great answer. Thank you. Definitely. Perfect.
All right. Here's kind of supporting idea that we may get to pull back here. Here's previous, this is the VIX rate. Yesterday I actually showed the SPX tilt ratio. I meant to show the SPX VIX ratio. But anyhow, we got a big divergence right there. The S&P's kind of moved higher. This ratio's moved lower. But again, nothing's real significant to the downside, because this is where all the panic happened. And if we go back into that range, and panic recreates, in other words, trend gets above 1.2 or higher, that's going to be a support area. So, I think, here's that big panic day right there. So I don't think we'll get too much below that panic level. I think more likely we'll be in the top range of the 650 range. I don't think we'll get down to 640. I think we'll probably somewhere midway or higher, then start to go up again. That's how I'm looking at it. So we'll see how that turns out. But this is not good on a short-term basis here. This is expiration week. I think tomorrow is kind of a nothing day. You get your pullback next week after expiration week, which is normally what happens. Then from there we start going up again. How high is high? I don't know. You got to get through October, which is kind of like September. It kind of can get messy. So I think I'll probably sell on strength and hopefully buy back on a pullback. So that's that. We can take a look at gold market.
I was waiting for it. Totally. We got some action in gold. Let's do it.
All right. Maybe I'm going a little bit too fast here. If we've got questions, we can answer them. But
no, this is great, man. I know you jump it. Yeah, please, because gold is moving. Let's do it. Yeah.
All right. The bottom window, this chart goes back to 2014. The bottom window is the 18-day average of the up-down volume for GDX. So it's the stocks in the GDX. The next higher window is the 18-day average of the up-down. Actually, the bottom one is advanced decline. The next one up is the up-down volume, and both of them are 18-day averages. And I marked the times going back to 2014 when both those indicators got above 40. And the little circles right here are when that happened. If you can kind of see
okay.
them.
Sure.
I don't know about your readers there.
Yep.
This is a failure right here. But we got that back there. Over the window here, that was basically late August. We got one. And what's unusual, we got another one here basically the 15th of September, just a couple of days ago. So you kind of got a double whammy. But anyhow, when you get above 40 on both those indicators, normally the rally lasts another 6 months or 3 to 6 months. This one lasts another 6 months. This one went on another 3 months. This one went another on, looks like about 4 months. This one went on for another 6 months. This is a failure. I hear the music. So,
all right, let's hang on there, folks. We're going to come back with our man Tim Ward. We're going to be talking the finish of this gold. Come back. We're talking gold. Gold down $41 right now in the session, $36.76. We'll come right back, folks. Welcome back, folks. S&P's up by 32. Markets in the green. We got gold off $41. We're talking to our man Tim Ward, and we're talking some gold. Go for it, Tim.
All right. So anyhow, this is the blow-up figure of this over here, so you can kind of see what's going on. And this is, I got data going back to 2014, and it very seldom gets above 40. It happens once every couple, sometimes 4 or 5 years before it happens, but every couple, 3 years, you get a reading above 40, and that's usually a surge pattern to the upside. What's interesting, we got a surge pattern twice in about basically a month. And, is that bullish or bearish? Well, it's not bearish. How bullish it is, I don't know. But it's kind of a double signal. You get one back in late August, and you get another one in September. So it could be a substantial, I don't know. But we're going to jump ahead here, just another chart. What I'm thinking is this is happening, why we got a double, I guess a double whammy to the upside, because previous times we only had one, now we got two of them, that define a surge pattern to the upside. I'm thinking what this is this may be kicking off right here. I showed this with Basil. Anyhow, the top window is the HUI, the bottom window is the NDX, and the middle window is the monthly HUI NDX. When this ratio is rising, HUI is outperforming NDX. When it's declining, NDX is outperforming HUI. So anyhow, back in 2000, approximately 2000, this ratio turned up and stayed up all the way in basically 2012. So that said, gold stocks outperformed the NASDAQ stocks in general. Then from about basically 2012 down to 2024, NDX outperformed the HUI. In other words, NASDAQ stocks outperformed gold stocks. Well, that's changed since 2024. About January, this ratio turned up again. And this is the first time the RSI, so I did an RSI on this ratio. So long as the RSI stays above 50, that ratio is in a rising mode. When it's below 50, the ratio is below 50, then the HUI NDX ratio is basically in a downtrend. Well, this is the first time we got above 50, or actually got above 60, going back to 2012. We're at 65 right now. And so that's never been that higher for the last 12 years. So I'm thinking what may be happening here is gold stocks are going to perform over the next 12 years. Is it a 12-year cycle? Well, it has been a 12-year cycle over the last two cycles, I guess. It's not a great, it's not 20. Everybody wants 20 times in the past it's worked. But I'm more concerned about, this is quite a coincidence. You went up for 12 years, you went down for 12 years. Right at 12 years, now you're turning up. My bet for the next 12 years. Go ahead, Tom.
No, I was going to say that middle chart is going to get my mind thinking, Tim, for sure. That HUI NDX comparison. I was just pulling up the NASDAQ and saying, what did the NASDAQ do from 2000 to 2012? And of course, it was struggling and gold was on fire. And I was just pulling up the NQ, but, that's like 4,800 to still by 2012, you're pushing 2,600. And we've been on a heck of a market run, right? I mean, that's so I like that chart, as in I just like it that it gets you thinking because, boy, doesn't look like a coincidence. We'll see, but that's quite a pop from the lows. And it seems like on that chart, when you get a reversal of trend, watch out sometimes.
Yeah, and also, what's really curious, this ratio bottomed at almost the exact same price.
Yeah, right.
I mean, what a coincidence. Yeah. But, so you take things as go, but as long as this ratio, RSI, stays above 50, this thing's going to keep going. And so I'm thinking we could have possibly 12 years. Let's get back to this chart. So why did this give a double surge above, to get above 40, if you look at, this time frame from 2016 to mid-2019, no signals. What's that, 3 years or better, 3.5 years? Then nothing between 2023 to 2025. Well, it just started triggering right now. So that's 2.5 years. Anyhow, this is kind of saying this is a double whammy. I thought it was the top right there. This thing went on from about 61 up to 70 and did another surge in pattern. So I don't think these gold issues are anywhere near topping, and I think as we go along, we'll watch this ratio. As long as that RSI stays above 50, this trend is probably going to continue higher. And how high, I don't know. But
when you look at that chart, do you give any credence of either side, or, as in? That could mean either, right? Or it could mean both, as in it could mean the NDX pulls back in relation to the gold equities, or it could mean the gold equities just go up in relation to the NASDAQ, or, of course, you could have both happen at the same time. What do you think about that, or in terms of that?
What I think both markets are going to go up. The NDX is going to go up. And you can't really see it down here, but that was a 2000 top in the GDX market. It had the crash of 2000, but in general, after that, the market actually did kind of go up.
Sure.
But I'm thinking gold stocks will go up first. But we looked at a lot of gold silver ratio, XA or gold to GDX ratio. All those ratios have just been it's exploded to the downside. Exploded, I guess you might say. Imploded. And so those gold stocks have been super cheap over the last several years. And I've always looked at that. I'm thinking, this thing can't get any cheaper. And when it did, and finally now they're just starting to turn up. But relatively speaking, I should have put those ratios on Tuesday's show. We did actually show some of those ratios, but the gold to silver ratio and the gold to GDX or XAU ratios are just rock bottom. And so I'm thinking this rally has legs, and I think a lot of these penny stocks, just like back in 2000, where I remember Tom and I, your dad, BGO started off a quarter. I think went to $16.
Amazing, man.
Yeah, and I'm thinking there's a lot of penny gold stocks out there. They're all over the place. Matter of
Now,
fact,
hear
most
what
gold
Tim
stocks
just
are still-
said, folks. I was just going to say, hear what he said, because, with risk is reward, you're buying quarter stocks. But, yeah, when we get a run like this, folks, those are the types of runs. And sometimes it's hard to fathom when, these multiples already. We have equities in that gold market, Tim, up by what, 200, 300, 400%, right? But those are the runs that are possible, folks. I remember it. I was a young guy, younger than I am now. Of course, we all were. But I was old enough to remember it, Tim, and boy, it's a while ago now. There are a lot of people, I think, that never got to see some of those equities run with that type of multiples in this market.
I'm thinking that doors is maybe opening, and we'll go through it as this ratio right here we're looking at right now, this chart we're looking at. This kind of will define if that's really happening, because this thing should stay above RSI should in general stay above 50. For the next maybe 12 years. So we'll see how that works out, but I'll be paying attention to this chart. But
I'm going to be thinking about that tonight. 12 years, folks. We're going. Here we go. Oh, I love it, man. And hey, the charts. The chart, that chart, man. I'm going to be thinking of that chart because that looks like we are at just the beginning. It does.
Yeah, it does.
Tim, thank you so much. Folks, check it out. ord-oracle.com or check out those webinars under the services tab. Tim, great stuff. Look forward to talking to you next Tuesday at 3:30 as always, man. You have a great day, great weekend.
All right. Thank you.